Let's bring in Tom Forte, Senior Research Analyst and Managing Director at D.A. Davidson. Tom, I know we're going to get to Apple. I know we're going to get to Pinterest and others. I want to begin, however, with Amazon and something you say. Simply put, we are worried Amazon is losing its soul. What do you mean by that? And if the company is losing its soul, why do you have a buy rating on the stock?
So thank you for asking me that question. So the way I think about it is we published 24 white papers on the convergence of the technology and retail space, 2 solely devoted to what could slow shares of Amazon, similar to what you saw at Microsoft and Walmart, and 2 on the future of Amazon. So the thought was that Amazon could disrupt any sector. We looked at trillion-dollar global total addressable markets, and we, like investors, believed that if Amazon made an effort, it could disrupt anything. The best example that Amazon is not disrupting is grocery. They bought Whole Foods. They haven't done meaningfully better since acquiring Whole Foods. When you look at the 18,000 people they're laying off people in some of their potentially disruptive areas, think drone delivery. So couple that with also the discontinuation of Amazon Smile, their charitable giving effort. We talked about this notion, will there be a future where consumers may not want to shop on Amazon? And I, for one, am shopping less on Amazon on the discontinuation of Amazon Smile.
So why do you have a buy rating on the stock and a price target of 114?
So I think what you're seeing this year in the strength in tech in particular is that the sector was oversold. So I think we have to keep in mind, the basic elements of math and investing. My average stock was down 50% last year. It would need to double this year to return back to where it was before the weakness. So I think that what you're seeing right now is Pinterest is a great example. They're reporting on Monday. They're announcing another round of layoffs Thursday before the Monday they report, but the stock is rallying. So what you're seeing is here, technology companies are getting a bid, including Amazon, and the stock is doing well despite these challenges.
Tom, I think what you're picking up on is almost something that we experience from the consumer side as well. You start to feel like the years in which Amazon came out with the Echo and was so innovative and kind of doing all these things just feels like they're past that. And you wonder if the company really makes sense continuing to be a retailer and a cloud company and all the rest of it. I don't know if there's ever any real serious talk about a split, but it's kind of feeling less and less like the company that Jeff Bezos made.
Yeah, and I think the best example, Kelly, of that lately was when they implemented a delivery charge for consumers who buy less than $150 of grocery. So you think about the Amazon's built on price, convenience, and selection. And now you're going after price, making it less price efficient for consumers to shop on Amazon. So I think at some point that flywheel may decelerate. And that's also why I'm concerned that Amazon's losing its soul.
All right, Tom. Thank you very much. Tom Forte, we appreciate your time today.